You clicked on this video because you want to know how are airdrops taxed. I'm a CPA and I'm here to break it down for you in less than 10 minutes. Let's go. So the biggest misconception about airdrops is that they just have a $0 cost basis when you get them. This is not true. So airdrops are actually taxed as income at the fair market value at the time you receive them. That's right. So whenever you receive an airdrop, whatever the fair value at that time is, that's actually going to be ordinary income or other income on your tax return, Schedule 1. So that means regardless of if you sell it, as soon as you receive that airdrop, if it has any value, you've just made income that needs to be reported and is taxable at that time. So in this scenario, let's say you receive 100,000 Pengu, valued at 3 cents per Pengu when you receive it. And again, these numbers are not exact. I'm just using round numbers here for ease. So you receive 100,000 Pengu at 3 cents per Pengu. So that's $3,000 worth of this asset. You just reported $3,000, or you just incurred $3,000 worth of taxable income. Now later you sold 100,000, you sold that Pengu for 1 cent. As we know, sometimes these airdrops drop in value, which does happen. And so you sold this Pengu for substantially less than what you bought it at. So the question is, how is this initial receipt of the Pengu taxed, and then how is the subsequent sale taxed? We'll get into that. So the questions are, what are the taxable events? We received the Pengu airdrop and then we later sold it at a loss after it went down in value. So what are the taxable events and how do we calculate them? Well, the first thing is that when we received the 100,000 Pengu at 3 cents per Pengu, we received $3,000 of taxable income at that time. So as soon as we received it, the fair value of that airdrop at that time is taxable income. As I said earlier, this is contrary to what many people believe, which is that airdrops have a $0 cost basis and then it's just pure profit when sold. That is not how the IRS views it, and if you report it that way, you would be reporting it incorrectly. So the IRS says as soon as you receive something as value or of value, you report it as income. So in this case, the airdrop of $3,000 worth of Pengu is reported as income at that time. And later, it went down to 1 cent per Pengu. So we received it when it was worth 3 cents, and now it's worth only 1 when we finally sell it. So we actually have a $2,000 capital loss, and that's the cost basis of $3,000, so the same amount of income that we reported, minus the $1,000 that we received in proceeds is our $2,000 capital loss. So this is one of the more difficult things to wrap your head around and to hear as someone that might be receiving airdrops, but these can actually not offset. So because this is income and this is a capital loss, they cannot offset each other. If this was a capital gain and then this was a capital loss, then they could offset, no problem. But unfortunately, because the IRS views this as taxable income and not a capital gain, and then this down here is a capital loss, they actually can't offset. So in this scenario, this person is going to have to report $3,000 worth of income, and then they have this $2,000 capital loss that can only be used to offset capital gains. Of course, there is that rule where if you have excess loss, you can use some amount up to $3,000 to offset income, but that's beside the point. If we're talking major airdrops here, this is a big problem that we've seen a lot of. And the reality is because of this, and this is just purely from a tax standpoint, there is a strategy, a tax strategy, to immediately sell airdrops as soon as you get them. Because of the way that these are taxed, there is sell incentive for airdrops. As soon as you receive an airdrop, you are going to have tax on the $3,000 of income. So because we know we're going to be taxed at that point, we might as well at least get the cash benefit of that $3,000 instead of waiting for the potential collapse of that airdrop, which does happen quite often, as we've seen here, and then we would have that capital loss, which we would not be able to use to our benefit. So because of this, there's a little bit of a tax strategy to immediately sell airdrops so you can actually claim that 3K, and then therefore you're actually getting the $3,000 that you are being taxed on. Now, similarly, if it goes up after you receive it, so let's just assume that this actually went up in value, then it would just be the same concept except it's a capital gain. So you would have the $3,000 of income, and then instead of this being a loss, let's just say it was a $2,000 capital gain, then again, yeah, it's just a capital gain. The key here is that when you receive the Pengu, whatever the fair value is at that time of that airdrop, that's taxed as income. It's taxed as income, and that becomes the cost basis on those assets when sold. So if it goes up from that point, you'll have a capital gain. If it goes down from that point, you'll have a capital loss. And by the way, my name is Justin. I'm the head CPA at the crypto accounting firm CountonsheepYT, and we solely focus on crypto tax preparation. So if you work with TurboTax or a traditional tax preparer, that's perfect. That's where we come in. We handle just the crypto portion of it, filled out, ready to file, and then we pass that back to you so you can either plug it into TurboTax or hand it off to your tax preparer who might not necessarily know crypto like we do, and then you're good to go. And if you enjoyed today's crypto tax lesson, make sure to follow for more videos like this. And as you know, the crypto regulatory landscape is constantly evolving. So if you want help navigating the new guidance and strategizing around the new guidance, definitely follow for more. We are going to be releasing videos as news comes out, and we're going to be helping you navigate the new environment. So make sure to subscribe and turn on the bell notification for more.